Good evening, Yoela. Thank you very much for hosting me.
Mutsonge, back in the day, it was typical this time of every month to see the local currency appreciating due to conversions from dollar to kwacha by the large corporates, especially the mines, for tax purposes and, of course, salaries. We don't feel these movements nowadays, if any. What would have, what would be the reason for this?
Thanks, Yoela. So there's been a number of changes, a confluence of factors starting sometime in the third quarter of last year, where first of all, the mines are now paying taxes directly, to the central bank in dollars. Previously, tax payments were in legal tender and kwacha. So what that did was every time it was a tax season, the mines were incentivized to have to convert their dollars into kwacha, and then that would then ease, the exchange rate. But now they're paying taxes directly. So what that has done is it's actually sucked out a lot of dollar liquidity from the open market, because these dollars just go straight to the central bank. And then at the same time, you also have other mechanics such as, value-added tax refunds. So you find that the mines were paid value-added tax refunds in kwacha, and the mines do have kwacha. The only reason why the mines need kwacha is to meet some of their salary obligations and any local currency obligations. So if they already have the kwacha, then they are under no pressure to convert dollars, and that's why you've seen very little activity. And then on the other hand, I think it's just suppressed business activity. There's very little conversions that are taking place. There's dollar scarcity, there's that widening pipeline. So the fundamentals are actually dictating what you are seeing. And in fact, that's a very, very good observation, because clearly what we're seeing is the flows are not as much as they used to be previously. So this is also reflecting dollar scarcity. Thanks.
Right. Now, last week we had a bond auction that was undersubscribed. Just how much of an impact is the depreciating kwacha and sovereign credit rating having on these auctions by the central bank?
So there was an undersubscription. Yes, it's actually the second undersubscription of the year, and it's very, very worrisome, because then if you start getting these undersubscriptions, then you tend to worry how the Ministry of Finance is actually going to fund its fiscal program. So the central bank is supposed to raise about $600 million equivalent, which is about 13 billion in the first quarter of the year. And if you start seeing under subscriptions, then it means that already they are running a deficit position. So what is actually driving the outcome of these auctions is risk appetite is actually fading. So there's a skew towards shorter dated, higher yielding assets. So you'd find that players are more interested in treasury bills because they run up to 1 year. There's lesser risk than locking up their liquidity in longer dated bonds. So what you can see is in the last auction, that's the bond auction, out of 1.5 billion kwacha of assets on offer, only about 453 million was raised, and 79% of that was packed in the 2 year. You can actually see that the 2 year is close to the 1 year. So people are being very, very cautious, and they packed that, and the yield there was 32%. So what you have is there's a lot of factors that will then determine the direction that money markets will play out. One, Zambia's fiscal position is deteriorating. There's that uncertainty coming from those defaults, and credit rating is default rated. So the risk weights, especially on bonds, would be very, very high, and people are being very cautious. So you can actually see that manifesting. In terms of the currency, you're not going to get that much participation coming from players that would then send dollars, convert to kwacha, and then lock up their liquidity into that. But then what we're seeing is Zambian bonds are actually being traded in the secondary market at spreads which are higher than the current curve. So meaning the secondary market is telling you that the curve right now is pretty much overvalued. It's overvalued. So you find that they're paying yields of about 36, 37% on 5-year paper. So that tends to also show you what the premiums and the risk skew and posture is in the market. So you can actually see that your currency market is then filtering to drive behavior in the money markets. The two are actually interlinked, Joella. So that's exactly what's driving that performance.
Right, interesting. Now, before you give us a brief summary of how the global markets have performed today, Mutsonge, I want you to focus on, on commodities such as base metals and crude. They've been on an upswing price-wise the past 6 months or so. What sort of signal are these base metals and crude sending to general economic recovery?
Okay, so the rally, first of all, a few months earlier was then sparked by vaccine and medicinal breakthroughs. especially that the BioNTech, AstraZeneca's, Johnson and Johnson do give the world hope and spreading profit. And at the moment that vaccines were out, they gave and spelt hope around economic recovery, and the world was then tending to reopen. There have been a few setbacks here and there, but the recent rally that we have seen is actually driven by a Joe Biden-led stimulus. He's supposed to sign off 1.9 trillion worth of dollar stimulus package that is supposed to boost employment, but that is then causing inflationary concerns as well. But because of that, we've seen bond yields, especially like the US 10-year is 1.38%, crossing 1.3, and you can actually see that yields have actually come back to pre-pandemic levels. But that in itself, coupled with inflation, is actually weighing how the stock markets are then pretty much performing. But then risk appetite is coming back into the market, and with risk appetite coming back into the market, investors are not going for dollar-denominated assets, and the dollar index against the basket of 6 major currencies is close to its weakest, 90.3, coming from levels of 100.2. A weak dollar then gives a rally to commodities, and that's why copper is now trading for a 10-year high. Copper today crossed $9,000 a metric ton. These are levels that we last saw in 2011. Very good news for the likes of Zambia, DRC, and all those other countries that then export copper, because they'll be able to balance their fiscal budgets. But then on the crude side, crude is actually being helped by economic recovery, and at the same time, demand will then creep in. But at the same time, Texas should have started pumping crude because of that bad weather issue that happened, but then it would take a longer time. So Texas is a key contributor in the crude markets, and because of that shorting, it's actually caused crude to rally 2%. And today, international ICE Brent is right about $64.5 a barrel, while WTI US crude futures are just about $60 a barrel, which is not very good for Zambia, especially if the currency is weakening. So there is a riot in the base metal rally. Tin, $27,000 a metric ton, 10-year high as well. And we'll continue to see this, but then it's viewed as a bit of speculation here and there. Prices should then eventually start to settle. But the rally that we're seeing is a little shocking, but then it's explainable. Well, thanks.